Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if these fancy financial reports are hiding more than they let on. Today we're diving deep into Nicholas Fund Incorporated's latest filing and N-CSR report, which is basically their detailed shareholder update. This report is a treasure trove of information for anyone invested or interested in Nicholas Fund Incorporated. It is not just a dry financial statement, it is a story about where the fund has been and where it is heading. Think of it like a company's annual checkup, but with a lot more spreadsheets. So what is the big news? Well, according to this report, the fund has had a pretty interesting period. They've changed their fiscal year end to the 31st of October, meaning this report covers a shorter 7-month period from the 1st of April 2025 to the 31st of October 2025. This is important because it means expenses and performance figures might look a bit different than a full 12-month period. Let's talk money. For a hypothetical $10,000 investment in Nicholas Fund over these 7 months, the cost was about $74. That is a 0.70% annualized cost. Now this might seem small, but over long periods, these costs can really eat into your returns. It is always good to know what you are paying for. Performance-wise, the fund saw a 10.41% return over these 7 months. That is not bad, but it did underperform its benchmark, the S&P 500 index, which had a much stronger showing. The report explains this by saying the fund focuses on stable growth companies. These companies tend to do well when markets are steady, but can lag in very strong up markets, especially when a few big companies are driving the entire index performance. That is exactly what happened here, with the AI and crypto booms making certain sectors skyrocket. On the bright side, the fund benefited from an underweight in the energy sector and some smart stock picks in communication services. They specifically called out Alphabet Inc., Class C Nvidia Corporation, and Advanced Micro Devices Inc. as individual names that helped boost performance. Even though their weightings in these companies might have been lower than the S&P 500, they still contributed positively. However, not everything was rosy. Negative security selection in the financials and information technology sectors hurt the fund. Companies like Pfizer Inc., United Health Group, and Kenvue Inc. showed up as detractors. This highlights the challenge for the fund, balancing their focus on quality with the market's sometimes unpredictable swings. Now let's look at the long haul. This table really shows you the power of compounding and how different investment strategies play out over time. Starting with a hypothetical $10,000 investment in October 2015, Nicholas Fund grew it to $30,880 by October 2025. That is a solid gain. However, the S&P 500 index in the same period grew that $10,000 to a much larger $39,196. This illustrates the point made earlier about the fund strategy often lagging behind the broader market during strong growth phases. Looking at average annual returns over different periods, it is clear the S&P 500 has outperformed Nicholas Fund. For the 10-year period, for example, the S&P 500 returned 14.64% annually, while Nicholas Fund returned 11.94%. This isn't necessarily a bad thing for Nicholas Fund, it just means their risk. Reward profile might be different, emphasizing stability over aggressive growth, which sometimes means missing out on the biggest market rallies. Let's check some key stats. As of the 31st of October 2025, Nicholas Fund had about $4.18 billion in net assets. That is a sizable chunk of change. They held 58 different investments and had a pretty low portfolio turnover rate of 9.04%. A low turnover rate usually means the fund managers are taking a long-term buy and hold approach, which aligns with their described strategy. The top 10 holdings give us a snapshot of where the fund's money is concentrated. Alphabet Inc., Class C Nvidia Corporation, Amazon.com Incorporated, and Microsoft Corporation are all in there. These are all huge tech giants, and it is interesting to see the percentages. Alphabet makes up 6.08% of the net assets, Nvidia 5.58%, and so on. This concentration in large tech companies makes sense given the current market environment and the fund's focus. Sector-wise, information technology is the dominant area for Nicholas Fund, making up 35.84% of their investments. Consumer discretionary and healthcare also feature prominently. This sector allocation reinforces the idea that they are investing in growth-oriented areas of the economy. Beyond the numbers, there are some important changes. As mentioned, the fiscal year end has shifted. Also, Michael Shelton is no longer a portfolio manager effective the 1st of November 2025. Leadership changes in the investment world are always worth noting as they can signal shifts in strategy or management philosophy. Diving into the actual investments, we see a lot of familiar names. On the communication services front, Alphabet Inc., Class C, and Meta Platforms Inc. are listed. For consumer discretionary, there is Amazon.com Incorporated and Home Depot Incorporated. In information technology, the heavy hitters are NVIDIA Corporation, Texas Instruments Incorporated, and of course Microsoft Corporation. It is a portfolio built around leading companies in essential and growing sectors. The statement of assets and liabilities gives us a snapshot of the fund's financial position on a specific date. On the 31st of October 2025, their investments were valued at over $4.18 billion. They also had receivables like dividends and interest due, and some payables for things like investment securities purchased and management fees. It paints a picture of a well-funded and actively managed entity. The statements of operations are crucial. For the 7 months ended the 31st of October 2025, the fund reported net investment income of over $4.8 million. More significantly, their net realized gain on investments was a whopping $157.7 million. The change in net unrealized appreciation also added a substantial $243 million. This shows that even though the fund's strategy might lag in certain market conditions, it can still generate significant returns, especially through capital appreciation. These statements track the movement of money in and out of the fund. Over the 7 months, net assets increased by nearly $406 million, primarily driven by that strong unrealized appreciation. They also paid out over $212 million in distributions to shareholders. Now we get to the really detailed part, the notes to the financial statements. Here they explain their accounting policies. They use fair value measurements for their investments and categorize them into level 1, level 2, and level 3 based on how observable the inputs are for valuation. For Nicholas Fund, all their investments as of the 31st of October 2025 were in level 1 or level 2 categories, meaning they are valued based on observable market prices, which is good for transparency and reduces subjectivity. The notes also touch on related parties. Nicholas Company Inc. serves as the investment advisor and manager. There is a fee structure there based on net asset value, and they may also be paid for accounting and administration services. It is standard practice for funds to have an advisor, and the details of that relationship are laid out here. And finally, the auditors report Deloitte and Touch LLP has given their opinion that the financial statements and financial highlights are fairly presented. They've been the auditor since 1977, which shows a long-standing relationship. This report gives confidence that the numbers we've seen are reliable and have been scrutinized by an independent party. So what is the takeaway from all this? Nicholas Fund Incorporated is a large established fund with a clear strategy focused on stable growth companies. While this strategy means they might not capture the absolute highest highs of a bull market, like the S&P 500, they offer a potentially more predictable path. Their strong performance in areas like information technology and communication services shows they can pick winning companies within their chosen sectors. The change in fiscal year and portfolio manager are points to watch. Overall, the fund appears to be in a solid financial position with a clear investment philosophy, navigating the market with a focus on quality. What do you think about Nicholas Fund's strategy and performance? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community for more real-time discussions and insights. Thanks for watching Corporate Decoder, and we'll see you in the next video.